Hey traders, this is John Fortune here of this week's Weekly Forex Forecast for the 9th of March to 13th of March 2020. We're going to start off, as always, by looking at the US Dollar Index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming weekend, also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we had this big sell-off to the downside, and this was caused by a 50 basis point cut from the Federal Reserve. They decided to actually cut between meetings. Usually we'll get these interest rate decisions at the actual meetings, but they decided to cut unexpectedly between the meetings, and this causes big sell-off to the downside in the US dollar last week. We are overall looking for further declines to the downside in this market, as this was a big sell-off and this looks like the start of a bigger advance to the downside. We'll have to wait and see, but this is what it looks like so far. Going into next week, we actually have quite a special set of circumstances. Something we've discussed in previous videos is that we had this 50 basis point cut from the Federal Reserve last week because of the ongoing effects of the coronavirus on the global economy. And on top of this, this is also not just playing into the US dollar. This is especially as well playing into commodity currencies like the Australian, the New Zealand and the Canadian dollar. So once again, going into this week, because of the special set of circumstances we have, although we're looking for further declines to the downside, there are a couple of factors which can affect the US dollar next week. Because, for example, we have such a big sell-off, we may actually spend the week correcting, and we may have a small amount of strength coming into the dollar next week before perhaps the week after we decline to the downside. So going into next week, especially with other currencies being weak, and because we may have a very small amount of short-term strength coming into the dollar just in the form of a correction, we are actually going to be going into next week without a cleared bias in the dollar one way or the other compared to the other currencies, and we would expect the dollar to actually appreciate against some of the currencies and perhaps depreciate against others. So what we're looking for in the dollar index, we are looking for a correction back towards 97, 96 before further declines, and the next key area of support to the downside is 95.17. But we are not going to, even though we're looking for this may not come next week, so we're going to go into next week with a neutral bias on the dollar, bearish to neutral bias, and we're going to be trading the currency pairs on their own merit, as again, some of the other currencies like the commodity currencies are likely to be even weaker than the dollar next week, and we're going to be trading the pairs on their own merit going into next week. So next market we're going to look at is crude oil. Now last week we were looking further declines to the downside, and we were looking for a pullback. We started the week here, we said we were looking for a pullback towards broken support and turning resistance, and we had this pullback. We didn't quite tag the resistance, but we had this really nice bear flag set up, and we had a really nice sell-off down towards the target last week at the 42.21, which is about here. So oil was a really good move last week. What we'd like to see is, coming into this week, we'd like to see another correction take place just like we did last week, because this will give us an opportunity once again to start to look for bearish setups in this market. If we can get a pullback, and always if we can come back and retest broken support, turning resistance, this is best as we get better risk to reward setups. But any pullback in this area towards the 46, 47 is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts once again down towards the next key of support to the downside and the target set at the 39.13. So next market we're going to look at is euro dollar. Now last week we broke to the upside on that 50 basis point cut from the Fed. The euro, of course, being 57% of the dollar index, benefited greatly from this cut, and we are looking for further advances to the upside in this market this week. What we'd like to see is, if we can get a pullback, as we're coming up towards the target already, if we can get a pullback and any correction in this area, preferably if we can come back and retest broken resistance, turning support at the 1.10390. This is going to be a great place to start to look for bullish setups, and we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.1412. So next market we're going to look at is pound dollar. Now pound dollar broke to the upside again with the US dollar index and that 50 basis point cut last week, and we are looking further advances to the upside in this market next week. We've pretty much just moved up in a straight line, so we're expecting a bit of a correction to take place. Any correction, any pullback towards the key area of broken resistance, looking to turn support here at the 1.28460. Any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups, and we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 1.3172. So next market we're going to look at is US dollar Japanese yen. Now last week we were looking further declines to the downside in this market. We did have a steep sell-off with that rate cut, and we did take out the target set at the 107.24. Very simply put, going into this week we are looking further declines once again to the downside. What we would like to see is if we can get a pullback first, as we're right near the lows here, any pullback in this area is going to be viewed as a great opportunity to start to look for bearish setups in this market. And if we get the right kind of setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside, the target set of the 107.24. And as always, if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 of the 101.86. So next market we're going to look at is the Aussie dollar. Now you can see, despite the fact we have a weak US dollar, we are still structured to the downside in the Aussie dollar. Now why is that? Because the Australian dollar, especially the Australian dollar with its large economic exposure to the Chinese economy, is also weak. So we have two weak currencies here. So although we're still structured to the downside, we are favouring dollar short positions next week. So of course euro dollar to the upside, pound dollar to the upside, etc. How we're going to use this then, because we know we have a weak Australian dollar as well, and this is still structured to the downside, is we use these as what we call plan B currencies. So if we are primarily focused on shorting the US dollar, so for example we're looking, let's say, for pound dollar to the upside, US dollar yen to the downside, if we start to see strength coming into the dollar index, if we start to see it correcting and pulling back, this will be the currency to come to as a plan B, okay, if we start to get strength in the dollar, and we'll start to look for that reversal trade to the downside. So despite the fact we have a weak dollar going into next week, what we would like to see is if we can get a pullback, and preferably as always if we can come back and retest broken support, turning resistance in this case at the 0.67060. This is going to be an area we're going to start to look for potential bearish setups, and it's important we have to have reversals. We cannot just trade at these levels. We have to have reversals before we actually enter positions. But if we start to see the dollar strengthen and we get bearish reversal patterns in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.6286. So next market we're going to look at is New Zealand dollar. Now with the New Zealand dollar as another commodity currency, this again is going to be a plan B currency next week. Despite the fact we had a major sell-off to the downside, and in fact we had a reversal in the dollar index last week, we did not come up and break out of this downtrend in the New Zealand dollar. So again, what information can we actually glean from this? Well, we can see that the New Zealand dollar is also weak going into next week. So when you start to look at some of your cross pairs outside of what we're looking at here, you can use this information in terms of dollar short positions. New Zealand dollar short positions, that is. So going into next week, what we'd like to see is if we can get a pullback further, and preferably if we can come and retest broken support, turning resistance at 0.64170. This again is going to be a great plan B currency next week if in fact, because we've had such a big sell-off in the dollar index, if all we're going to do is get some strength coming in and we correct before the next leg down, this will be a go-to currency we can look at to trade this big correction. So we start to correct like this in euro dollar, for example, bigger correction euro dollar, bigger correction to the upside in the dollar index, giving us some dollar strength, okay, in the near term. Okay, we don't know this for sure, but again, this is certainly a possibility after the big sell-off we have. If we get that, these will be go-to currencies to look for in order to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.6128. So next market we're going to look at is US dollar Swiss franc. Now last week we were looking further declines to the downside, and we did come and take out the target set from last week of 0.9543. Very simply put, we're going to be looking further declines to the downside in this market. We need to see a bit of a pullback first to give us an opportunity to go short. Any pullback in this area, and preferably as always if we can come back and retest broken support from the past, turning resistance in this case at 0.9611. Any pullback in this area is going to be a great opportunity to start to look for bearish setups once again in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 0.9287. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at 0.9188. So next market we're going to look at is US dollar CAD. Now last week you can see we actually appreciated, and this is exactly what we're talking about in this video. We appreciated to the upside in the US dollar CAD. So the US dollar actually strengthened against the Canadian dollar last week, despite that huge sell-off we had. So although I know lots of people like it when you just come out and you say, well, the dollar's going up, so therefore everything's going to go down against the dollar, but the markets just aren't that simple. It just doesn't work like that. At the moment, especially because we have external factors as well, the commodity currencies are going to suffer. And if you have a weak currency, let's say a weak US dollar, but you have a weaker Canadian dollar, even if the US dollar is weak, if you have a weaker Canadian dollar, the US dollar CAD is still going to move to the upside. Albeit it's going to be fairly tortured like this, so we would put these down more as plan B currencies, okay, because we prefer to actually trade strong versus weak currencies. So primarily, again, going into next week, and this is what we cover with our members, the strong versus weak currencies, mainly pound dollar to the upside, euro dollar to the upside, US dollar yen to the downside, US dollar franc to the downside. And then as a plan B, we'll come and look at the commodity currencies if we get that strengthening of the dollar instead, so we can play this both ways. So in terms of the US dollar CAD, this will be, again, with the other commodity currencies, a plan B currency going into next week. And so what this means is, what we would like to see is, if we can get another pullback, that would be great. A pullback in this area down towards the next key area of support here at the 1.32750. Any pullback in this area is going to be viewed as an opportunity to start to look for potential bullish setups. And we're going to be, as this is still trending to the upside, we're going to be looking at initiating longs up towards the next key area of resistance, the upside, the target set at the 1.3499, and if we can get a breakthrough here, we're going to be looking at the next key of resistance, the upside and target 2, at the 1.3563. So just bear in mind, once again, the commodity currencies against the dollar next week are more likely to be choppy, so they are the ones that are better avoided in terms of Aussie dollar, New Zealand dollar, US dollar CAD, but keep them on your radar, because if the dollar doesn't weaken, if it starts to reverse, they will be the go-to currencies where you can make money. And last but not least, we have gold. Now, last week we started the week here and we highlighted the 1585.48 as an area to start to look for a bounce to the upside. We came back and tested this. We just wicked this level before rallying to the upside in gold, and we came and took out the target set from last week, which was right here, the 1689.40. What we'd like to see going into this week, we are overall favouring further advances to the upside in gold, especially as we've had that sell-off in the dollar. What we'd like to see first, though, as we're coming towards this next key of resistance, the 1697.50, if we can get a pullback, and any pullback in this area, the deeper the better, of course, because this gives us better risk to reward. Any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish patterns in this area, we're going to be looking at initiating longs once again up towards the next key of resistance, the upside and the target set, the 1697.50. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 1737.90. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far, and also a big thank you to everybody who comments on the channel as well. I want to wish you all a fantastic weekend, and I wish you all the best for your trading next week. The only thing left to say is take care, and don't forget to trade safely.